Electric vehicle companies have been red hot over the past few months, and Chinese EV maker NIO Limited, NIO, is no exception. Chinese electric vehicle maker NIO watched its stock price drop after reporting a dip in February deliveries that seemed to unnerve investors. But securities analysts were focusing on the global microchip storage. Today, we will see how NIO partnership and merger will impact stock price. Number 7. NIO targets expansion into new markets and geographies. The business reported a 130% year-on-year increase in sales in the fourth quarter of 2020 to 6.17 billion yuan, $946.2 million, with sales for the full year climbing by 106.1% to RMB 15.2 billion, that's $2.3 billion. Vehicle deliveries rose to a record 17,353 in the fourth quarter, up from 8,224 in the fourth quarter of 2019 and 12,206 in the third quarter of 2020. Total deliveries in 2020 reached 43,728, more than double the 20,565 vehicles delivered in 2019. NIO narrowed its net loss by 51.5% in the fourth quarter to $212.8 million, while its full-year net loss fell by 53% to $812.9 million. The momentum has continued in 2021 as the company delivered a record 7,225 vehicles in January and 5,578 vehicles in February, up by 352% and 689% year-on-year, respectively, said NIO's founder, chairman, and chief executive officer William Bin Li in the quarterly earnings call. The company expected to deliver 20,000 to 20,500 vehicles during the first quarter, which would be an increase of 421 to 434% from the first quarter of 2020 and 15 to 18% from the fourth quarter. It expects total revenues to rise by 438.1 to 450.8% year-on-year during the first quarter to between $1.13 billion to $1.16 billion. NIO's production capacity reached 7,500 vehicles in January, and its partner, Chinese automaker ZAC Motors, has started to expand its production capacity to 300,000 units under 2 shifts to prepare to produce its ET7 model and future products. NIO launched its ET7 flagship sedan, its first autonomous driving model, at its 4th annual NIO Day event on January 9, 2021. NIO's growth strategy focuses on increasing its vehicle sales volume as well as its software and services usage. Number 6. NVIDIA Partnership. NVIDIA Inc., NVDA, and NIO just announced a partnership to develop a new generation of self-driving vehicles using NVDA's Drive Orin system on a chip to power E7 sedan technology. The first production vehicle is expected to roll off the assembly line in 2022. The stock topped out right after the news in reaction to the 4th debt offering since 2019, reminding shareholders the company still hasn't posted a profitable quarter. Still, NIO continues to grow at a phenomenal rate, with January deliveries increasing by 352.1% year-over-year to a record 7,225 vehicles. Breaking it down, the company noted deliveries consisted of 1,660 ES8s, the company's 6-seater and 7-seater flagship premium smart electric SUV, 2,720 ES6s, the company's 5-seater high-performance premium smart electric SUV, and 2,845 EC6s, the company's 5-seater premium electric coupe SUV. As of January 31st, 2021, cumulative deliveries of the ES8, ES6, and EC6 reached 82,866 vehicles. Number 5. NIO stock forecast for 2021 and beyond. Should you get ready for new highs? The average price target from 17 analysts that have issued a NIO share price forecast is $51.19 per share, with a low estimate of $13.50 per share and a high of $80.30 per share. 10 of the analysts have issued a buy recommendation, while 7 recommending hold. Analysts at Deutsche Bank reiterated their NIO stock price prediction of $70 per share on March 2nd after the company's earnings report. They view the first quarter guidance as impressive and raised their estimate for 2021 deliveries by 6,000 to 96,000, with the company on track to be a leader in the Chinese premium EV market. The Deutsche analyst said in a note to client on the NIO outlook, "Longer term, we see several areas of untapped growth, including developing a separate brand for the mid-tier mass market, potentially with partner. Incremental volume in Europe. Sales begin later this year, and few investors give NIO any credit for success there. And reoccurring software subscription revenue from NAD, NIO Autonomous Driving Service. With ample capital exiting 2020, we believe the company can invest aggressively to expand its capacity service network and improve its autonomous driving software engineering capabilities. We reiterate our $70 price target, still based on 10 times 2023 EV sales, and believe recent stock weakness is a buying opportunity. Analysts at Japanese bank Mizuho initiated coverage with a NIO share price prediction of $60 on March 10th, rating the stock a buy. Number 4, international expansion. NIO's ambitions aren't restricted to China either. To the contrary, the company is already making plans to expand into the European market later this year, whereas in China, the company targets 25% to 30% market share in the premium EV segment. In Europe, NIO says it will be satisfied with just 10% to 15%. The company plans to offer custom-tailored European offerings to the local market. And to support all this expansion, NIO, which sold fewer than 44,000 cars last year, plans to expand its production capacity to 150,000 cars per year by the end of 2021. Even then, NIO won't be done. According to Fang, the company sees its total addressable market worldwide as closer to 700,000 cars annually. Number 3, NIO offers a lot more than cars. Earlier in the year, NIO introduced the ET7 luxury sedan that will be available in 2022. The sedan has impressive features, including an autonomous driving sensor and digital entry system. The sedan can take the company to another level. NIO is focusing on the larger passenger car market segment, and it is working to gain a competitive edge with ET7. The car will come with batteries that can power a vehicle for 1,000 kilometers. This feature will be able to win the market segment that values long-distance performance. Investors are already piling up on NIO stock for the strong delivery numbers and impressive quarter 4 results. Although the company is not profitable yet, there is so much going right for it. It is also planning to expand in Europe this year. Interestingly, NIO is not only focusing on reaching new vehicle sales numbers, but is also working on its services and software. Besides the EVs, what sets NIO apart from its competitors is the battery swap program. Through this program, customers can recharge through a faster battery exchange. The company has automatic swap stations that take about 3 minutes to fully charge the battery. The stations can swap up to 312 batteries in a day. NIO has more than 170 battery stations, and it intends to install more than 500 stations in China by the end of this year. It will strengthen the position of the EV maker in the industry. NIO vehicle owners get a complete experience with the battery swap service. It already places NIO as a premium brand in the market. With strong delivery numbers and expansion in new geographical markets, NIO is poised for growth. Number 2, Wall Street loves NIO stock. NIO stock is a favorite with the Wall Street. Recently, Japanese firm Mizuho signaled a buy for NIO stock with a price target of $60. The firm stated that it saw strong upside for the stock as a growth leader in China. Deutsche Bank analysts reiterated the stock price prediction of $70 after the company reported Q4 earnings. Additionally, NIO is planning to list shares on the Hong Kong Stock Exchange this year. The company plans to see 5% of the share capital through the listing, and this could raise about $5 billion. Further, out of 10 analysts on tip ranks, 7 have a buy rating and 3 have a hold rating, with a consensus price target of $65.24, which is a 46% upside from the current levels. Number 1, the bottom line. NIO stock has been running higher over the past few months, and the price chart indicates that this will likely continue. Investor interest in EV companies has surged over the past year. After a strong upside, NIO stock has shown volatility in the past few months. The stock gained 1,900% and hit an all-time high in January at $66. It is currently trading at about $44. This dip is an ideal opportunity to add the stock to your portfolio. The two key areas of support are right below the current stock price, which should give it a boost in the coming weeks. In addition, the RRG is showing us that momentum has already slowed. As it turns higher again, the stock will likely be at new highs in no time. Despite the pandemic and the current downside of the stock, it looks promising for the long run. Investors are mostly keen on the fundamentals and value of the company. With regard to these aspects, NIO is certainly going strong and has impressive long-term prospects. NIO stock could reach its $60 level in the coming months. If you want to add it to your portfolio for long-term gains, now is the best time to make the move. Do let us know in the comment what you think of NIO's partnership and merger. Please subscribe to the Stock Advisor. Thanks for watching.